When you have X-ray vision on charts that you're putting money into, you can tell where the sellers are and where the buyers are before price action actually hits. I'll give you an understanding. For example, when we look at Bitcoin's price, we can see that there were a lot of sellers. There was very strong structural resistance just south of the 81,200 mark. In all probability, that meant that even if the buyers could push it up, they would be met with incredible sell side pressure, and that's unfortunately what happened. What you can see here is that we have a level of structural support currently at 79,800. We also have a minor level of structural support just above 79,140 and a stronger structural support level at 78,895. I just want to explain how this particular support and resistance works. When price is selling down, it will find structural safety nets to rebound it. This is where the buyers will come in and support price. But that supporting of price typically goes to a higher structural resistance level, and it can take time to break through heavy structure. And if we get a positive CTKS gap, which is a gap where there is no structure involved, price can move up very quickly, but if the sellers are too strong, they can push it down through levels. Therefore, what we've seen just recently with Bitcoin now trading just a little bit below 80,000, it's 79,942, is that there was so much structural overhead resistance just around that $81,000 mark. Bitcoin simply couldn't get through it and was pushed down to lower structural support levels and has rebounded. If you know where these structural levels are, you can take advantage of it, not just on Bitcoin's price chart, but on any crypto price chart. As Bitcoin has moved into an all-time high, a lot of people think that there is no structural resistance above it. This is blatantly incorrect. Statistically, there's actually a mass of structural sell-side resistance at 81,200. This is really important for you to note. If you just hang with retail influencers, you'll just get caught on the wrong side of the trade consistently. What you need is statistically significant support and resistance structures drawn up across your chart. Now, if the bears gain control, they will seek to push it below 78,800 down to around this 78,000, where there's quite a lot of structural support. The bulls, on the other hand, need to defend this 79,800 mark and come back and try to get through this 81,200. There is a lot of structural sell pressure around that area. And as many people think that it's all open air, they're going to be very surprised because they can't get above that area. But inside the service, you already knew this because you knew where the structure was inside the price chart. You were already taking your three-dimensional risk management and saying, this is a lot of overhead sell pressure. I'll need to just see what price does with that. And probabilistically, it will hit it and reverse back. And that's unfortunately what has happened currently. We do have a positive CTKS gap, so if the bulls get into control, we could come back to this 81,200. But please bear in mind, this is a key level on your price charts right now. You will also find the price charts intercorrelate and interconnect with each other. Here we're looking at total crypto market cap and total in Bitcoin move in sync, and their different levels will affect things differently. At the current time, Bitcoin structural levels are impacting the crypto market the most. But total structural levels also support Bitcoin, so this is something just to be aware of. When we look at the indicator from the service, what we're seeing here is that we didn't have that level of structural overhead resistance across the entire crypto market. In fact, it was looking pretty good, but this is where Bitcoin controls the alt market. So you need to look at Bitcoin levels in conjunction with total crypto market cap as well. One of the things that we've seen, as Bitcoin came down and found structural support, it rebounded the entire crypto market. Keep your eyes on the structural levels of Bitcoin and total, and of course, your money chart that you put money into. In the new course coming out in December, Profiting from CTKS Method Structure, I'll explain how you can do this scientifically. I'll just give you insights into what I do. And you can join that class completely free. It's worth $700 US. But conditions do apply, and the link is in the description of this video. What we're seeing right now is the total crypto market cap is breaking out of a level of structure. It's seeking to convert this structural level into a support. It's early days yet. We don't know if it's going to do it. So far, it's looking pretty positive, but we got to get an understanding of what Bitcoin is doing. As Bitcoin currently doesn't have any structural overhead resistance, it's likely to turn the total crypto market cap structure into support at this time. It takes 2 levels of standard certification to draw these lines, and we mark these charts up inside ctksmethod.org if you would like to save some time. Now, what we saw was Bitcoin's price just charge through that positive CTKS gap, come up to the 81,200 structural resistance level, and then back down. We are not at all surprised to see this kind of reaction inside the market. Many times when people see something taking off parabolically like this, they say, "Oh, I'm going to miss out." It depends. Many times people buy and just right then the price reverses on them. This is potentially because you're buying at structural resistance. It's very important to know where the resistance is. If people were marking up their charts from recent indicative price, they would draw a level of what they would call structure, but it's not structure whatsoever. Structure is always statistically significant. This is statistically insignificant. This is significant, and this means just about nothing. So a level like this, people would see, oh, it got above it. It's going to go up and through. But it's not correct because the structural resistance is actually at the 81,200 mark. And we knew this before. Mastering intercorrelation and interconnection is vitally important for you. You can see on total crypto market cap, that was the wick where the entire crypto market was drawn up to structural resistance at 81,200 inside Bitcoin. And now you can see it just decaying down. This is important to see what price does here especially, because this is a level of structure right across the entire crypto market. But don't forget, the alts are a little bit different from Bitcoin. Inside the course, Profiting from CTKS Method Structure, which will be available absolutely free, and that will save you $700 if you meet the conditions of entry, I will show you how to read charts across this intercorrelation and interdependence. It is a skill that you can use to turn a huge amount of profit. Already, we can see that total crypto market cap is creating a bit of a buy arc here, or a BA. Okay, let's see how it plays out. I'll give you a bit of an insight on how to look at Doge from looking at Bitcoin and total. You know that Bitcoin came up and spiked that 81,200 level, and total crypto market cap was coming into an area of structural support. You can see this playing out inside Doge's chart. Also, Doge has levels of its own structural support and structural resistance. Just north of 31,500 is a very important level of structural resistance on Doge, and a very important structural support level is just a little bit below 25,700. So, if the bears get their way, they will push it down below 25,700 and seek to make its way down. If the bulls get their way, they will push it across 27,500 and seek to rally it up past 31,500. But you know that this will very much depend on what is happening directionally with Bitcoin and total crypto market cap. Please make sure you look at the structural levels on Bitcoin and the structural levels on total before you look at the structural levels on the chart that you're putting money into. This is a key. If you were looking at Solana without an understanding of Level 1 and Level 2 standard certification, you may think that these are levels of structural resistance and this is a level of structural support. Unfortunately, you can't just look across 24 hours. You have to look across all the time periods under analysis. And when we do that, we can see that Solana has a light level of structural resistance at 21.19 and no structural resistance above. Now, what is stopping this? You got it. It's Bitcoin and total. This is why it's critical to look at Bitcoin and total structural levels before you look at your money chart or your MC. Now, what do we see here? We had that big breakout because Bitcoin was breaking out. But when Bitcoin hit 81,200, what did it do? It started to dump down. And we know Bitcoin has a negative CTKS gap, so it could fall hard and not be supported by total. And so far, we're seeing total just come down. There is a bit of a buy arc here, so at least that's something. But always bear in mind, you have 3 levels of structure at an absolute minimum inside the crypto market. You want to look at your money chart structure third, Bitcoin structural levels first, total crypto market cap second, and your money chart third. That is, if you want to make money consistently. If you like this kind of analysis, please let me know in the comments. So when we look at Solana, we can see that it's got a good level of structural support just below 205. It has a confluence of structural support just below 203 as well. There is not one level of structure inside a price chart. There are many, and the different levels have different strengths. And of course, when you get a lot of levels just congregating together, that creates safety nets that catch a price and rebound it. But it's always something that we need to look at in conjunction with Bitcoin and total crypto market cap as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.